Hello, viewers. My name is Sunday. You are welcome to Against FX. If you have not subscribed, please try and do subscribe. All right. And if you are getting value from the materials, the videos that we've been releasing, please leave a comment. All right. Help us to share and like the videos. Right, today we are going to be treating a topic that is very, very important in the life of traders. All right, so we have people who already know what they are doing, but they are not being profitable. And that is the reason for this video. All right, being profitable does not necessarily mean that maybe you are making plenty money. No, from trading. Being profitable also mean that you know what you are doing at every point in time when you step into the market or before you step into the market. All right, before you click that button buy or sell, you have already done your analysis thoroughly. Not just that, you already know what you are doing. You know what you are doing. Knowing what you are doing simply means when you want to take a trade, you have your rules. All right? All right, you have your rules. And once all those rules are met, you don't need to procrastinate or doubt yourself. Once all those rules are met, you take action. All right, you take action. There's no two ways about take action. That is a word. Take action. All right. First, you do your analysis thoroughly. And that is why we have what we call top-down analysis. If you don't know how to do those top-down analysis, please go and check. I have video on how you can perform your top-down analysis, starting from the higher time frame. All right, and then you read the structure you continue to scale down till the time frame that you use for your execution. So by so doing, you will find an opportunity where you are going to stay and wait for price to come to you. You don't just rush because you see there's a bullish trend or you see a bearish trend. All you need to do is to position and wait for trend, for price action to come and meet you. So today I'm going to be treating a topic I titled Moving from Not Being Profitable to Being a Profitable Trader. All right. Now you have gained so many experience, gained so much experience, yet you are not profitable and you kept on wondering why. All right. After this video, you will this video will calm your nerves. As a result, if you follow what I'm about to teach you now and you apply the principle correctly, you will just see yourself making progress. You will see yourself being profitable. You will just shift from not being profitable to being a profitable trader. Now, here is the thing. No matter your strategy, all right, no matter your strategy, no matter the type of strategy that you trade, like I said in my previous video, all strategies work perfectly. All the strategies work perfectly. If somebody tells you, one strategy don't work, it's a lie. All strategies work perfectly. But the only difference now is that will you be able to stick to one strategy? That is the question, and that is the problem of some traders. If you see the big boys in the industry, what they do is that they have a particular strategy and they stick to it. Even though maybe they are having a losing streak, like maybe a week, they don't shift from that strategy to another one. They stick to that. By so doing, when you continue to repeat that same thing that you do over and over again, over and over again, and also by applying the right risk management, you discover that you just shift from not being a profitable trader to being a profitable trader. Now, here is it. If you look at this time frame now, this is daily time frame. All right. When you open your daily chart, all right, you mark the notable levels. Mark all the levels that you see in the chart. Most especially any level that price has visited more than once. It's very important. Don't take it for granted. Once you open your chart, before you carry out your analysis, start from the higher time frame. As an intraday trader, that means you open your trade and close it that same day, no matter the maybe 2 hours, 3 hours, 4 hours. You always close your trade every day. You start from the daily time frame. Now, some people will wonder why. Why can't I just start from 1 hour because I execute my trade 15 minutes? Just 1 hour, I just scale up 1 hour, then I can just use that 1 hour to do my analysis, then use my 15 minutes to execute trade. It's good, but the fact remains that is the higher time frame that decides where price action should go. Is the higher time frame. Ask any big boy in this industry, any big boy in the game that you know, they will tell you. Some of them, they have been trading for 8 years, 5 years, 6 years, 4 years. They will tell you they all started with lower time frame. But by the time they now got matured, they now got the understanding that is a higher time frame that gives the direction where the trend should go. All right? Is it that you will not find opportunity on the lower time frame? Yes, you will find lots of opportunity on the lower time frame, but before you scale down lower, what I am sharing with you now is that go to your higher time frame, like daily. Open your daily chart. Mark those levels where price has visited more than once. It's very important. Mark those levels where price has visited more than once, just like as I have done now. All right? You mark them like this. And this one is another one. All right? You put this thing here because price has visited this point, and here you can see that a resistance now turn to become a support. It's a very, very valid level. This point here, you see a support, you see a support. Then you now see this point here, where you found a resistance. Resistance, 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 and you see resistance. Price kept on interacting with this level. All right, you mark these levels. It's very important. Mark these levels. All right, this is another point. You mark these levels. Do you understand? Mark these levels. You bring your this thing here and place it here where price actually got to. All right, you mark it. It's very important. Mark the levels correctly. Haven't done that, all you need to do next is to scale down to 4 hours so that you can see it more clearly. Can you see what we have done right now? You can see when price took off from here, it rejected from here, pull back, it rejected again, pull back, then it now push to the upside. All right? Remember, this point here is a very valid point in future because price will definitely come back to this neckline where change of character or market shift happens. All right, where market shift happens, price will definitely come back to this level. This point here is a market shift. All right, market shift. You see this point here, price will definitely come back to revisit this level. You just know that price will come back in future to revisit this level. All you need to do now, after you have identified this kind of level, even though, let's say you did not market shift, let's say you did not enter here to climb, all you need to do, as you have marked this level, let's say price was here, you mark this level, you just need to wait for price to come and retest this level. You see, when price got to this level, all right, price got here, because there's a resistance here. Always look at the left side. Look at your left-hand side anytime you are on your chart. Take a look at the left because price will always have references. Price will always reference to levels. Now, if you look at it, you discover that right here we have a resistance. So when price change character, he pushed up to this point, he respected even this level, then he had a pullback, then he now broke structure to the upside, then he respected this resistance because there's a strong resistance here, 1, 2, 3, 4, and 5. So when price got here, he respected it and it drops. Price will always use this kind of a place for a kind of liquidity, all right, because price will always come back to this same level where change of character or market shift occurs, all right. Now, all you need to do, some prefer this, you draw your distinct line on top of it and the neckline, You stretch it into the future and wait for price patiently to come. And as you can see, price came back to retest this level. Even if it takes you 2 days, 3 days, 4 days, 1 week, price has not come to retest that level, just hold on. You don't need to rush. All right? Market does not owe you anything. Rather, as you will step in, your target is stepping in at the right time so that you can make something out of the market. That is just it. By applying the right frame of mind, the right strategy, and the right confluences. As simple as that. Once you notice that there's a change of character or a market shift, you just draw something like that, or you mark that level based on the level you have marked from the higher time frame. You will see it will rhyme with it. All right. This is where change of character happens or market shift. All you need to do, stretch it like this, like as I've done. There is a line here, a horizontal line here. All I need to do is to wait for price to come back to this level. And once price get to this level, what will I do? I am going to take action. Once price gets here and I see a rejection, I am going to take action. Watch what happens. When price now move again after tapping in, it move. After it taps into this point, after retesting, it now push, came down, then change character again. It now change character again before it start pushing to the upside. All right, what now happen? After that swing, and where did the swing get to? This level that we mark from the higher time frame. It stops there, then price now drops again, coming back to that same level that we drew, this line here, to retest this level. All right? You can see it came back, retested this level, then before a very strong push to the upside. Do you understand what I'm saying? Now the price has come to revisit this level. Now it becomes a point of interest, and also this same place, this is a point of interest. This also is a point of interest. Now you just need to wait until price action come here again, come to retest either this one or this one. As simple as that. Because you know that you are bullish. This is a bullish trend. Is going, the price is increasing. It's a bullish run. You understand? It's a bullish run. So all you need to do is draw this level, this support level, and this level, because price has come back to retest it. It came, it changed character again, market shift. Then there was a dish out a buy to this point. There was a rejection because of this resistance, and price started dropping. And when price started dropping, what happened? When he got here again, he retested this line. When he got there, he dished out a buy, even though it did not go far. He dished out a buy. But when you look at the market structure, you discover that price has already given us a hint that is a pullback, that there's a pullback from this massive move. This massive move this massive move here, this one from up to this point, and here price is pushing back. This is a pullback of this bullish run. But why? How do we know? Because this level is not supposed to be broken. This level, because this is the last break of structure before price rejected from here. All right. So we now know at this point, we now know that price has finished this swing. This swing is done. You see, 1, 2, 3 is done. So the next thing we should be expecting after this formation at the top here, evening star formation, if you can read your candlestick very well, you know that this is an evening star formation. All right. Moment you see this, you should know that the bullish run is exhausted. All you need to do now is for you to be looking for an opportunity to what? To sell. Or if you don't want to sell, all you need to do is wait. You have already marked your structure. You have already marked your level. You marked your level already. All right. You wait and be expecting that once price pull back, this is a pullback from this bullish run. All right. This is a bullish run and pull back. You see, once we immediately got to this same level, what happened? There was a rejection. There was a rejection. And once you saw this rejection, because you know that this where market shift happened, and when price moved away from here, it came back, it retested it. After this run, and there's a pullback to this point, it now came because this is the origin that caused the whole move. The whole move started from this point. So we are not expecting that price should pull back and then break below this level. If it does that, that means we are completely bearish trend. It's no longer a bullish trend. As a matter of fact, before we even got to that level, this is the last break of structure. This point is the last break of structure. All right, that it broke structure to the upside, taking out this high. Immediately you see this point. It came back, it retested this point. Price action retested this point. All right, retested this level. It pushed a little, then breaking structure to the downside. You just know, because this one here, push a little, but it failed. The idea is that it was supposed to go up to go and take out this high, but it failed. Failed to create a high now means that this place did not do its job. All right. And as a result, is now going to be used as a liquidity, all right, to facilitate the movement for that underlying trend to continue. All right. So right now, this level here did not dish out a buy, though there was a buy, but it did not really fulfill its job. What it just did was a little push. What it just did was just a little push, and it now stopped here. All right. So instead of pushing to the upside to take out this high, it did not. Now, the resumption of this flow to the downside, we have to use this point as a liquidity to facilitate the movement to get to this point. All right. So once you see a fail to create, because this guy is supposed to create a high, it failed to create a high. That means the retracement has not ended. That is what it means. The retracement has not ended. It still continues. All right, but by the time you see a rejection like this, by the time you now notice that there's a rejection at a particular level, price is being rejected from a particular level, like from here, when price got here, there was a first rejection like this, then it now push to the downside. Like this very one, early buyers would have entered. But this guy here now push to the downside to push people out, to stop people out. Then you now see price start going, price now started going to the upside. Right now, we are here. So the point now is that this is a valid level, and this is another valid level. All right? So we have to just watch out for these levels. Watch out for these levels. Once price comes back to it and we see a rejection or maybe a bullish engulfing candle, then we need to act. One thing about trading, if you are still scared, that means you don't know anything about trading. If you know your strategy very well and you know what you are doing, you know what is market structure, all right? And you know what is market structure, we should not, at any point in time, be scared of taking action, all right? See, when price now got here, it violated this support level. All right, you see, it violated this support level. Now, this point here will say market shift. At this point now, you have to change your bias to be looking to short. All right, and immediately you got here, you see this rejection, then you now see this push. Once you entered here, at this, your next target should be this level because there is a strong level here, a strong support level here, where a resistance now turned to a support level. Before price can break below this place, is going to be a little difficult. So once you enter from here with proper risk management, all right, then you take your profit here and wait for price to tell you where he wants, the direction he wants to face again. That is how you trade. All right. Now, having seen this rejection here, that means buyers, they are rejecting the price from this level. All right. So you now see what we now experience here right now is what? A change of character. A change of character has happened because this is a large break of structure and price has pushed above it. It has violated this high here. So at this point, we should be looking for buying opportunity. All right. But there is a problem. The problem here is that we have a resistance level here, and we have another resistance level here. So what are we now going to do at this point? We have to wait either for price to come back, to this same level, then we will now buy. All right? Or we'll wait for price to now push below this level, retest this level, then we can now buy. Either of these two If that price get to this level, if it gets here and he found support, then it's going to dish out a buy. Or if it breaks below, it's coming to this next point, this next level, all right, this next level, then before it can dish out a buy. And as far as I'm concerned, this point here, when you scale down to 3 hours, all right, you now begin to see the structure more clearer. You see that change of character or market shift actually happens here. All right. So you are waiting for price to either come back to this point. We are waiting for price to either come back here. All right. For price to come back here, then you cannot buy. All right. On no account should price violate, even if it's coming back to this point, on no account should price violate this low. If price should break below this low, then we should now change our bias immediately and be looking for a pullback for us to sell. All right. Now, this is what I meant by for us to change our bias once we see price reacting in in a particular way. For example, let's say that when market opens, for example, when market opens right now, today is Sunday, when market opens some hours, from now, all you need to do is wait for price to now tell us where it's going. You don't just jump in from the middle here. No. When market opens, this is a support level where price, if you look left, price has tested this place. So we are expecting that price should, you see, when this price got here, it rejected it. And that is what dish out this push. All right. So if we continue to push, there's a resistance here. This resistance might send the price back to this level or back to this neckline where market shift happened. All right, before price will now start pushing to the upside. But if it breaks below this place and get to this point, breaks below it again, we will now say market shift. Once it violates this point, we will say market shift. That means immediately this level is violated, we are now going to change our bias. We will start looking for what? Selling opportunity. Now, immediately there's a market shift. All we need to do is wait for a pullback. If there's a market shift, wait for a pullback to this level or this level, then we'll now short the market. This is how to trade. It's not that difficult. Right now, price is here. We are waiting for price. Either price gets to this point, we buy, or price will come back to retest this level, then we'll buy. Failure to do that, if it breaks below, violating this level, we switch our bias. We wait for price to push to the downside, violating this level. Then we wait for price to pull back to a resistance level. Then once you see a reaction, you join the market to push the price down. As simple as that. And remember, your target point is either you use a psychological level. A psychological level is a round number, like for example, 32,000 or 3,200, 3,300, 3,400, 3,500. All these are psychological level. All right. Once you can use psychological level to take your profit, or let's say, for example, the push to the downside is here. It stops here. It stops here. Then before this retracement, when you enter from here, your target, your TP should be this support level, because it's what we call point of reversal. So you trade like this, I tell you, you will not have issue again in trading. You don't need to work your ass out because you are trading. No, you don't do that. Except maybe you don't have knowledge as regards to Forex. If you have knowledge as regards to Forex, you don't need to be beating yourself up because you want to trade. No, you don't do that. That is why we take our time to explain and to release materials that will help fellow traders, because we suffered learning this thing, this skill. And as God will have it, we already know how trading works. So those who are just coming up, instead of you to struggle like the way we did, because I don't want a situation whereby you'll be having analysis paralysis. You will not be having sleepless night because of trading. No. Just know what you are doing, apply the principle. You will see yourself shifting from the level you are now to being a profitable trader. Check this thing out. Check it out. Just test it for like 1 month. Then give me a feedback. All right. On this note, I say thank you so much. And again, don't forget that you can always, for fundamental analysis, always visit Forex Factory to know the news that we'll have ahead. It's very important. Then you contact us from againstfs.com. That is our website, so that we can have you train. All right. It's not everything that we'll be able to give out right now. But if you join us, all right, to master the art of trading, we will teach you everything that you need to know, and we'll explain to you in a more simpler terms and format. With practical training, you just grab everything about trading. So thank you so much. Don't forget to subscribe to our channel. All right. Don't forget to subscribe to our channel, share this video, drop your comment, like, and I tell you, as you do so, God bless you. So on this note, we'll see you again next time. Bye.